Morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissonou with Kevin Casey, and today we are joined by none other than Lynn Jackson. Good morning, Lynn. How are you?
Good morning. I'm great.
So,
How are
for
you today?
those unfortunate souls who don't know Lynn Jackson, let me just tell you, she is, to say a veteran is putting it mildly. I think I've known you at least most of my 36 years in this business. Lynn, how long for you?
Yeah. Yeah. About that long.
Yeah, I think,
Yeah.
yeah. So anyway, she is an account executive with Plaza and she knows her stuff. So she is such an amazing go-to. She knows how to, work on your loans, fight for exceptions, understand all the programs. I mean, she's a real pro. So thank you so much for being here, Lynn.
Thank you so much for having me. I'm honored to be here. This is one of my favorite shows, as you well know. So
You're
I'm
so
a
sweet.
huge
Thank you.
supporter.
Well,
You're a
hopefully this will be
sweetheart.
your favorite one.
Okay, so
It is my favorite.
I accidentally hit the button and called finger dialed at that was a nice way of putting it. A realtor. Now they're calling me back thinking that I need them. Okay.
That's better than what I did the other day. I butt dialed the DRE commissioner.
Oh,
Well, I'm
dear.
sure well, okay. Moving right along. So just in case you're wondering what is going on in the world, is the war over yet? I heard the war is
Not
over.
yet.
Is it over? So
Trump hasn't declared it over yet.
well, he said
Yeah.
maybe, I don't know, but at the very least, things are a little better in the Straits of Hormuz, which, how many people knew what the hell that was a month ago? Bonds are better for the third day in the row. I was afraid to like say anything, but now, like last time I checked, we were at 4.31 on the 10 year, up 34 basis points, and this is yeah. So happy day.
Yeah,
So
getting there.
again, markets are so sensitive to whatever the news is of the war, and so all the reports that are coming out matter, but they're going to pale in comparison next to anything about the war. In particular, things like oil prices, things that are going to impact inflation numbers, that is going to be a problem. So be careful. And as I learned the hard way a couple of weeks ago, if you see a rate you like, lock it in. Oh God. Okay.
You're so true.
So tomorrow, back to economic information. We have retail sales and then it's jobs week. So ADP is going to be released. They're expecting 40,000 new jobs. Friday, we have the ever famous BLS jobs report. They're expecting 55,000 job creations and for the unemployment number to stay the same. So we'll see how that goes. Jolts came out this morning. It was a pretty weak report, showed 6.9 million job openings, but that doesn't necessarily indicate 6.9 million jobs because there could be double counting, et cetera, as we've talked about ad nauseum. And just in case you forgot, JOLTS is job openings and labor turnover. So we've also had a little parade of Fed speakers recently, and they have been pretty positive. I mean, like somebody sprinkled some sugar on their Wheaties, for God's sake. So that's something. Made the market happy. So cross your fingers, say a prayer to your favorite deity. I don't know. I have a client who every time he's doing a transaction, I tell him he is responsible for whatever his rate is going to be, and that if he wants his rate to be really good, he has to pray really hard. And so he'll literally text me, tell me he's on his knees. So anyway, okay, we have somebody saying that there is an echo. Is it more than one person or is it just one
I'm
person?
getting a little echo from you.
Um,
I haven't
hmm.
heard Lynn speak, so
Yeah, I don't have an echo.
From me, you don't have an echo?
No, I
just
do not.
Okay, so it's just Kevin and the guy who's leaving.
yeah.
So yeah, so Kevin's fine. Other people are so that's interesting. So I'm really sorry. I don't know why. Hopefully
Everyone
on
else is saying no echo. So
yeah. Oh, that's interesting. So you and this guy should get together and see what's wrong with your computers. So
yeah,
hopefully on the recording it will be fine. Okay, we're getting a lot of no echoes. All good here. Thanks guys for letting me know at least that it's, that I don't need to get out and start again. On that note, speaking of recordings, our buddy Jason Bellevue, he has all of our past shows up on our YouTube
YouTube.
channel, Mortgage Pros 411. God bless him. And I just wanted to say thank you to whoever it is that watches within like seconds of it being posted. They must have like the alerts turned on. So they get an alert and they're like, I'm on it. So I'm like, okay, we at least have a couple people. Yeah. So somebody suggested that whoever's hearing an echo to check to see if they're logged in twice. I don't know. But again, it sounded like there was no echo for when the
Yeah.
other when you guys were talking. Anyway,
Except for
moving
the
right
person who's
along.
logged in twice. That would do it.
Yeah, that would do it. So anyway, um, okay. So a few other things. Home price appreciation came out for Case-Shiller and FHFA. Positive, people. We're positive for appreciation. So that is something. University of Michigan Consumer Confidence, this actually made me laugh, came out for March. Here's a big shock. You ready? Consumer is not happy or confident. Who knew? I
Huh.
mean, who knew? But you know what I find interesting is that my phone is ringing a lot. Is your phone ringing a lot? Lynn, is your
Yeah,
phone
yesterday
ringing?
was crazy.
Is your phone? How
It's
about you,
ringing.
Lynn? What?
It's ringing. It is definitely ringing.
I mean, there are deals.
Mm-hmm.
I
Yeah,
mean,
there are
deals.
deals in there.
Yeah. And I mean, most of mine are purchases right now, which is interesting. And by the way, a couple of them, I'm not joking for once, no hyperbole this time. I've been working on them since October and they're both in docs. And so, and there were various reasons that they had to work through to get to this point, but patience where it pays off eventually. And both of them are extremely grateful and convinced they couldn't have done it with a computer. What? What? Are you sure?
You
Anyway,
just push the
so
button. So it's on your phone. You just press the button on your phone. It's
I know.
pre-approval pops out, catered to your situation.
I know. My tolerance level for posts about, the newest automation and the newest, data and all this stuff, my tolerance level is diminishing by the second. I'm like, okay, that's great. You can data yourselves to death, but the reality is they need us. Sorry. We're what keeps the deals together. I also thought it was interesting. There was a breakdown. Actually, Chrisman had a couple of interesting things, Rob Chrisman, this week. And one of them, he did a breakdown of the percentage of, like 8% of the mortgage activity are arms. 8. I'll tell you what, 8% of my activity is not arms. How about you guys?
I know who has
Not at all.
8% arms. The big banks. They're really pushing the 7-1 arms. Um,
Yeah, I bet you're right.
yeah, and
Yeah, there's
guys,
times when
and
our arms are good, but not right now.
yeah.
Yeah. FHA is 20% of the mortgage activity. VA is 16%. USDA is less than 1%. That's a really small number. I just started wondering, like, how many resources are they taking for less than 1%? I wonder I mean, maybe for the people they help, it's really important. So for people who do
But
USDA, let me know.
well, you know what though? A percentage of land, USDA loans are a higher percentage of those ones because most of them have large acreage when they're doing those loans.
Okay, Kevin, I bet you $10,000 you've never done a USDA loan. I don't
Nope,
know what
never done one.
you have
Nope.
no idea what you're talking about. You just
Yeah, well,
pulled that
they're on
right out of
acreage.
your
I mean,
ear.
that's what they're for.
Uh-huh. Okay, Lynn, you know about USDA loans, right?
Yeah, they're very tough loans, in my opinion. I mean, they hardly ever qualify. I've done very few, a small handful in my career.
Yeah. Well,
Small handful.
I'm sure for whoever they're helping, they're really helping them, but I just, yeah, ROI, baby. Okay, so Rob's other interesting thing I thought was when we were, I'm always like complaining about our politicians not quite being in touch. Okay, and this is not, by the way, broken down by party. I would not even be interested in that, but at least 73 out of 100 sitting U.S. senators have a median net worth of over $1 million. That's 73% versus the
I would hope
population. The
so.
general population, which is 7%, have
Well,
a
I
median
sure
net
would
worth.
hope so.
What?
First of all, a lot of the senators are seniors, and so seniors should have a nice nest egg built up by the time they're ready to retire. And a lot of our senators are like in their 80s these days. You can list off a whole bunch of them. so that are that high up there. So yeah, $1 million, that's not that impossible.
Okay. You know
And
what?
do you really want someone who can't save money and is not worth anything to be your senator? If they can't manage their own finances, do you really want them to manage the
Okay. You know
country's
what? Okay,
finances?
first of all, just stop defending that. So I would like to see the before they were senators and after they were senators net worth.
Well,
Let's
yeah,
start
that
there.
that would be an issue if they're
And
making
if you
lots of
go
money
back to
because
our
they're senators.
if you go back to our founding fathers, they were youngsters and they were just regular people. So anyway,
But they were
I
all
just thought
farm
that was
owners.
interesting.
Most of them were big farm owners and had estates and such. So, you know,
Okay. You know what? I would just like you to not take a history lesson from Kevin because he is pulling things out of his ear right now. I can assure you. All right. We have Nicole who has commented that USDA loans aren't particularly tough. So, Lynn, apparently they only call you with the really tough ones, and the easy ones are out there somewhere. So, okay. So, again, I thought I did the math and added it up. That's 45% is ARMS, FHA, VA, and USDA. So I guess that's 55% left for conventional, jumbo, and non-QM. So we're going to talk today about some conventional and rehab options. So ADUs. What piqued my interest is I saw that they had come out with some new ADU guidelines. And I thought it was very interesting when we started taking a dive into this that really what they've done is they're lining them up with California law, which went into effect a couple of years ago. And they had been telling people in California we could do these, but the GSEs hadn't caught up. So now Fannie Mae guidelines are allowing certain things. Lynn, do you want to take it from there?
Sure. So some of the recent changes for Fannie Mae are like on the home style. The limited now can go up to 75% that with two draws, which is now matching the FHA guidelines. So we're really
hang on.
excited about that.
We're gonna start with ADUs though, not the rehab. We're gonna do renovation in a little bit, but
right.
We'll start with the
So
ADUs.
the ADUs, the most significant changes are the Fannie Mae 2 and 3 units are now allowing you to build an additional ADU on the property, but you can't exceed 4 units on the property. So 2 and 3 units. If you have a 3 unit, you can build 1 ADU. On single family properties, you can build up to 3 ADUs for a total of 4 units. So that's the most recent change with in reference to the ADUs and what they're allowing. FHA, we haven't had any guidance on that yet.
Right. So
yeah,
just to recap, it used to be that you can only have 1 ADU max. Now you can, and by the way, this is as of March 31st. So today.
That's today.
With UAD 3.6, you got to use the right, you got to be doing DU under the right, yeah. So it used to be 1 ADU max and only on 1 unit properties, and now they've changed that. So that's big. And then also you can now, yeah, it's huge, but almost bigger is ADU rental income can now be used to qualify. So that's a humongous shift, right? So, and that was 2025, I think. But it's limited to primary residences, purchases, or limited cash out refinances. And you can use and double check all this, you guys, max 30% of total qualifying income. So just a reminder that not all lenders have embraced these guidelines. So make sure, or they might have overlays and decided we're not going to. So either they could have not adopted them yet, and especially the ones that went into effect today. But make sure you're checking with your lenders to see if they are following these guidelines.
Yeah, I mean, I think that's an important point because as far as the renovation loans, when building ADUs, we're not adhering to these guidelines where you can do the multiple units or 3 to 40 units with 1 ADU or the single family with the 3 ADUs, even though it is allowed. We have, however, been able to make exceptions on conventional and non-QM products to do multiple not multiple ADUs, but multiple ADUs, at least 2 ADUs we have been able to get some exceptions on that. So
talk
definitely
to us
check with
about
your
it.
lenders.
Yeah, talk to us about exceptions, because I think that people think, oh, DSCR, non-QM exceptions, but they think, we've sort of been trained Fannie Freddie guidelines. Those are rules. And that is not always the case. So walk us through when you would think we should ask for exceptions, when is a good, you know what I mean? Like, give us some pointers on that.
Well, and it depends. So are we still talking ADUs, or are we talking?
Well, you can talk about whatever you want. So you can expand if you want, if there are more than.
We can make some exceptions on some of the non-QM products. We can make some LTV exceptions, like 5% LTV exceptions. It won't go over whatever the maximum will. We can make some exceptions on the loan amount exceptions. We can make exceptions for rural properties. We can make exceptions on some reserve requirements. There's several exceptions that can be made. I just tell people, call me whenever you have an exception, because you just don't know where we may be able to make that exception. We make a ton of exceptions on our non-QM products.
Yeah, just don't expect to get a whole lot of exceptions. One, maybe two exceptions.
Yeah, you might do. I wouldn't start layering exception after exception, because then it does become, more of a challenge for sure. So I wouldn't say more than 2 exceptions.
All right.
Per file. Yeah.
Unless they have 87 million quadrillion dollars in the bank, and then maybe.
Well,
That's
even then it might be tough, because we have to go to the investor for the exceptions and see if they're willing to make that exception, and that might not be a possibility.
All right, well, but if you don't ask, you don't get it. So at least call Lynn, call your reps and ask. So another change is with Fannie Mae is that they're loosening their guidelines on ADUs as far as which properties can include an ADU, and now they're allowing manufactured housing with under certain conditions, and also 2 to 3 unit properties. And then of course we're going to get into the renovation loans, because those have changed a little bit. So that's something, right?
Yeah. So also on manufactured homes, they are now allowing up to 50% of the subject to value on the manufactured homes. Not all lenders are adhering to this, so you should definitely check with your lenders to see what they're going to allow on that, because we're still allowing only up to 50,000 total renovation, and that does include your contingency reserves and reno costs as well.
Okay, so again, all I'm hearing is you got to pick up the phone. Like, this is dialing for dollars like the old days, and you have to know your AEs, and the AEs need to get out of their houses and go meet us, because we need to know each other so we can have these relationships, so that we are able to know who to call, when to call, and then, who to ask the questions of, right?
Yeah, I'm finding the only time to go to meet your reps now is at mortgage events, because, if I go to the office, there's nobody there. Reps aren't going to come to my house. And so the only place to meet them is either you have to meet for coffee or come to a, mortgage event of some sort. So get to your mortgage events.
Well, if I may, if not just you, but if people went to their offices, AEs would probably come back and see us again. But yeah. Anyway, okay. So what hasn't changed? So ADUs still have to be a separate independent living unit. So you got to have a kitchen with a real stove, a bathroom, a sleeping area, and a separate entrance. It's got to be smaller than the main house on the same parcel and have independent access and privacy. So that did not change.
That did not change.
Okay. All right. Okay. Okay. I'm like, if I say
no, didn't change.
Please chime in.
Some of those things are not changing. So no, it's really just primarily the number of units that have changed, and maybe like setbacks and things like that, and then the time frame on the side of the municipality, they have to have them approved within 60 days. They have to review them within 5 days to make sure that they have all the paperwork they need to make their decision. So they'll review them within 5 days, and then they have to have them approved within 60 days so you can get started on your project.
Okay. And
because
just,
on renovation loans, you basically have to start the project within 30 days of closing. So we need permits, we need everything approved. If you need engineers, we got to get that all under wraps before the loan closes so that within 30 days they can start the work.
Okay, so we're going to get to renovations in a minute, but I had a brain twitch. The UAD is the new 3.6, is the new appraisal. Hello. So you have to be using that new appraisal to have these guidelines apply. And I texted our friend Mike Simmons this morning to see, is it time for another? We did a appraisal show a few months ago, and it was really, really good. It's on our YouTube channel. But as it's rolling out, it might be interesting to update that. It's interesting to see the response from appraisers who, some of them are fine and they're embracing it and they understand. Some of them think the sky is falling and they're going to quit. And, so it just depends on where they are, in their careers and in their mindset. But Fannie and Freddie were recently quoted at a conference and I think I mentioned this a couple weeks ago, that they are absolutely not getting rid of appraisers. That is not the plan. They need the data. They need the analysis. And Mike Simmons had actually written a piece that Rob Chrisman published. I keep saying his name today. I don't know why. And it was, again, it's just like us. Like, there are certain people who think that they can do this whole process and get rid of us and that we are unnecessary and an added expense. But anyone who's, I don't know, getting a loan, let's start there, or is in the trenches and understands how hands-on this is and how much of it involves, instincts and knowledge and a heart and backstories on your clients, et cetera, et cetera. So how important that is. It's the same with appraisers. They're really important. We do need them. And so this new form that's coming out, it's very different, very, very different, but we will all be using it by November 2nd because the GSEs are not expecting the 2.6 appraisals after that date. So that is very soon, very, very soon. So there you go.
I'm curious if anyone's have any challenges with these new appraisals. I haven't yet.
There are a couple companies that are using them already. So I'm going to do some poking around and talk to some of those people and see what their feedback is on that. Lynn, are you guys using them yet or taking them yet?
No, not yet. No.
Okay. Do you have any idea what the rollout time is for you guys?
No, we haven't had any conversation around that just yet. I'm sure it'll be coming up though.
Yeah, I would imagine those conversations are happening. They have to be.
In the background, I'm sure they're happening.
Yeah, they've got to have a plan by now.
Yes.
Do you realize tomorrow is the beginning of the second quarter of 2026? Is that crazy?
It is.
Is it just me or is time flying?
We're almost at Christmas.
Well,
we'll be soon.
Yeah, soon enough.
I mean, that's definitely flying.
Yeah, he's not totally wrong about that. Holy moly. Okay, so let's talk about renovation now, because again, this is a good thing to have in our back pocket. We need to at least be aware. There was a huge section in NMLS last year on renovation, and Zoom, thank you very much, changed the share screen function, and I couldn't figure out how to do it today. So Lynn would be happy to send you their matrix breakdown of the wholesale renovation programs.
Right. Okay. So what we have is it's a renovation comparison that compares the FHA limited, FHA 203K standard, the Fannie Mae home style, USDA, because we do USDA renovation and we do VA renovation as well. So it compares all the different products and what they do, what they allow. It's a really cool matrix. Yeah, it's a very cool matrix. So
Yeah.
I can send it to anybody that wants it. They can just drop a comment in the chat, and I'll be sure to send them the renovation comparison matrix.
Okay, so why don't you walk us through what you're seeing with renovation situations that might help us as far as doing more deals, etc.
Okay, so we see a lot of people have need because on the FHA side, properties may not be meeting minimum property standards. So doing a renovation loan when the property's not meeting the minimum property standard is a great way to get the deal done. I mean, they could submit it on a regular FHA loan, and then we just flip it to a 203K and save the deal. So that's one thing that we're seeing. We're seeing some families, growing families, or people that are being transferred from other states, and they have large families, 4, 5, 6 kids, and they can't seem to find a home that fits the needs of their family. So we're seeing people that are adding second floors to properties, and just making the homes bigger to fit their family needs. We're seeing, again, the ADUs. ADUs serve many different purposes. You have older kids, your adult children that can't afford to buy a home, or can't, rents are just going skyrocketing and that sort of thing. So they can still maintain their independence by building an ADU in the property. Or your aging parents who are, the seniors need, they're not quite ready to be living in the home. They don't need that much care, but you still want to keep them nearby. So you build an ADU or just an Ampere unit, anything like that. Some of the other things we're seeing is pool renovations. People are out there buying homes and they want a pool. The house doesn't have a pool. We can do a pool renovation. And that's a real simple, easy close. It's an easier appraisal. It's just, you don't need a HUD consultant on that particular renovation. So
just to renovate the pool.
What's that?
Just to renovate the pool.
Just to build a pool.
Oh, build a pool.
So so if you have a backyard that doesn't have a pool, somebody's buying a house, they're looking at a house that doesn't have. I work with some brokers that work with builders, and the builders don't have, they don't offer pools, but they may have enough lot size to build a pool. So we'll do a pool renovation loan to help them be able to have the pool in their backyard at the time they're ready to move in. The pool is, they close it usually, and then we do the pool renovation. So
okay, can I ask a question about that? Mm-hmm. So on a normal renovation loan, you're getting the benefit of the future value, right? So, what will the place be worth after the renovations are done? How does that work on a pool when often it doesn't translate dollar by dollar by any stretch of the imagination? How does that happen?
Well, typically what we do is we add the appraised value to the cost of the pool. It does have to appraise out, and usually they do. They usually do. And we don't do everything. If it's a pool renovation, we're just doing the pool. We're not doing the backyard. We're not doing the outdoor kitchen, the overhangs, all of that. It's just the pool. That's on the pool renovation. Now, if you want to do a regular renovation loan, you can do like a home style, and then you can get the all pimped out backyard thing going on. Get the outdoor kitchen, get the, all the bells and whistles in the backyard. You can build a whole oasis back there, but you won't be able to do that with a pool renovation. Pool renovation is just the pool.
Okay, I'm still not over this. So are you refinancing an entire, you have a whole first mortgage just to build a pool?
That's true.
Holy
just to build a pool.
Bullets. How much difference in rate is there?
We don't have renovation seconds yet.
What?
What's that? We don't have any second renovations.
What is the rate on that thing compared to a conventional rate, like average?
Well, they're usually a little bit higher. I'd say around a half in rate higher to do a renovation loan than it is to do. It just depends on the product.
And after it's done, you can refinance it.
And that's the whole point. Usually people don't usually stay in renovation loans more than 6 months. they do what they're trying to do, unless the renovation itself is taking longer. Because on the if you're doing a full renovation, a standard renovation, a 203K or home style full one, then you've got 12 months to do the renovation, to complete the renovation. So, but if it's a smaller project, people are just gonna, as soon as the project is done, it's usually the 6 months has passed for the EPO. So then they refinance out of it and do a regular loan.
That's assuming the rates haven't gone through the freaking roof. So yeah.
That's if that happens. There's always that chance.
Okay, so somebody's asking, what market are you in? I will tell you, she's in the Bay Area in California, a San Francisco Bay Area. He says a pool in Texas appraises at about 25,000. You can't even get a hole dug for that. And that's where my questions are from, because actually here, like in the Bay Area also.
Yeah, adding a pool doesn't add value.
Well, okay, so adding a pool, number one, it's freaking expensive. I mean, people easily add 110 grand in hardscape and digging, all that stuff, right? So and then anyway, I would love to see one of these pencil out, because I have not seen, I didn't even know you could do a pool reno, but anyway, that is fascinating. Where are you doing most of those, Lynn? Did you say new subdivisions?
I mean, we do them all over. I don't see other places, but I've done them in California. Most of mine have been refis versus purchases.
Interesting. All right.
Oh, but they're renovating the pool.
I do have. What's that?
Are they renovating the pool, or are they adding the pool?
They're adding a pool. They're building a pool.
Interesting.
Yeah, interesting. I find pools interesting anyway, because again, to Randy's point, appraisers are not exactly generous with value when it comes to pools.
Yeah.
And they have, and I will never forget when I was a youngin' and I was like, what do you mean the landscaping isn't worth anything, only the hardscape? And explain that plants only live if you water them. Therefore, it's not worth crap unless you've got, you know what I mean? Like, it doesn't, anyway. So that whole conversation is interesting. We have a zillion people who are asking for you to send them things, your contact information, and I am taking screenshots of each one. So I'm keeping track of them, Lynn. We'll make sure you can touch with everyone who wants to be touched. Okay, so one of the things that I have found over the years, and I've talked about this before, I've done some weird renovation projects. So I've taken 5 units to 4. I don't even know if most cities would even let you reduce the housing stock anymore. I've done,
go chime in. Well, that is something that we would not allow on a renovation loan. You cannot change the number of units per se, unless you're doing, like I said, the ADUs, as I explained earlier. But if you're trying to take a 2-unit to a 3-unit property, that's not allowed.
Yeah. So I took 5 to 4.
Number of units. Yeah.
I've done them in areas where you had to have fencing and a guard standing there. I've done, sliding off a hill needed a bunch of, engineering. I mean, weird things, right? The most important thing is you got to know your client. You need to know that they are going to get their act together and get it done in time, because I've told this story too. I have a borrower who was dying to do a construction loan, a reno loan. I wouldn't let him, because I knew damn well there was no way he was getting this done in time. And sure enough, when he finally did, I finally got him the money for his project, not through a renovation loan. It took him like 2 years. But he was able to happily, putz along and do his thing, and it was all fine. But I mean, know your client, know what their speed is.
I have one just like that.
So my recommendation for that would be to vet your contractors up front. Yep. You want to make sure they're not doing too much work, that they don't have so much work that they can't possibly get your renovation done within the 12 months that's allowed to do a renovation. So you definitely want to vet them. You want to make sure you got to check their references, make sure that they do things in a timely manner, because you can't go beyond the 12 months, really.
Well, just to be clear, this guy wasn't a contractor. Come on. I mean, I just knew he was going to putz along no matter what he was anyway. So that's a whole different thing. But let's talk about that for a minute right now. So let's talk about people who want to do their own work or who are contractors. What is allowed? What is not allowed? Talk us through that.
So if you're doing a self-help renovation, We don't recommend it. I'm going to be very honest about that. We don't recommend that you do self-help. And the only product you can do self-help on would be FHA. You can't do it all on the home style or the choice renovation for that matter. So if you're doing it, the maximum size of the project is only $35,000. So most people want to do big renovations. If it's over $35,000, you're not going to get it done anyway. And they also can't get paid on the labor part of it. So it's really just the cost of the materials and that sort of thing. So it doesn't become a very attractive thing to do a self-help. I have not done any self-help projects at Plaza, to be honest with you. And it's because it's just not an attractive feature for somebody to do the work themselves when they're due to the restrictions.
Why are you laughing, Kevin?
Oh, just I read a comment from Rita.
Oh, please. You started talking in the middle of our sentences. So no one needs to be defending you right now, for God's sake. So what did you want to say when you so rudely interrupted?
I have a deal right now where it's a construction project, and the client called me back in January and said, "Hey, listen, we're almost done. I came over and checked out the place. They were, putting paint up on the walls." I'm like, "Okay, you really, you are getting close. Where are you at with getting the occupancy permit?" And he's like, looked at me like, "Huh?" I go, "Occupancy permit. These are occupancy permits." He goes, "Call me." I go, "Call me when you think they're coming." That was 2 months ago. No occupancy permits yet.
Why? Because the city's taking so long?
The city's taking that long. It's not. I won't mention the city. I don't want to besmirch some city I don't live in or ever lived in.
There are plenty of slow cities all over the place. Let me tell you. I mean, I hear horror stories out of every corner.
This one, you could probably guess which city this is.
I think I know because I think you told me about this. But yeah, you really do. You have to become friends with the inspectors. You have to know your people at the city planning departments. You have to, I mean, all of that. And also, if you're in the middle of, Pacific Palisades, and everyone in the vicinity is also trying to rebuild the house, you've got to take into consideration what the timing is going to be and is it doable.
I would agree.
Well, they maybe should start taking a page out of California's book and try to get the municipalities to change some of the guidelines there and get these things done faster. Because it's going to make a difference. If they're slow to get things done, like California now has their new laws, the 60 days to get everything approved. I mean, that hopefully we're leading the nation, and then others will follow.
Yeah, no, that same project, they were way beyond the 60 days to get that project approved. And it was fairly simple project. But no, that city messed that up too. So
is there any recourse on that, Kevin? Do you know?
No idea. No idea.
Yeah.
Interesting.
Can I go back to the self-help thing again? There was another thing that I should have mentioned and didn't, is the contingency reserve on a self-help is 20%, whereas on most of the other products, it's between 10 and 15%. But it's definitely going to be 20% on a self-help deal. They're going to really vet those contractors to the letter of the law. It's really not a good idea to do self-help.
Wow, they really don't like those. I mean, that's kind of counterintuitive to have them have a larger reserve. Interesting. Yeah. Okay, so we have a clarification here from Chris. So new law permits 3 ADUs on top of existing main house in a single family home, and the answer is yes. So, and Catherine says, report that city to the state of California department that regulates the new 60-day rule. That's a great idea. Kevin, what do you think?
That's not a terrible idea. I'll have to check on that and see where they're at with that.
Not a terrible idea. It's a great idea.
Maybe I'll get them after them and sue them.
Well, I'm not saying you have to
get all the attorneys involved,
I don't know, get a pointy toe up someone's behind. That'd be great. Okay, so let's talk about draws because I remember back in the day there was some institution that was known for being super slow on the draw. And so you would finish, you break. Okay, so just in case you haven't done a reno loan ever, so you take the scope of work and then you figure out what your first bit of work is going to be. That you divide the whole project into a schedule and they're broken into parts. And in between each
Mm-hmm.
part, you have to get an inspection and have it signed off. And then you can go to the whoever's handling the money and ask for your next draw and for them to sign off on that thing. And sometimes it's slow. How does that talk us through what's going on now?
Okay, so what I can say to that is what the person that handles the draw on a standard renovation is going to be a HUD consultant. So the borrowers would have to also hire a HUD consultant.
On FHA.
On 203K, on a full 203K or a full home style renovation or full choice renovation. They would have to, we don't do choice right now at the moment, but we may be getting it back. Right now we do the 203K and the home style. But if it's a full, yes, you need a HUD consultant. If it's a limited that goes up to 75,000, as long as there's no structural work, you would not need a HUD consultant. So, you're right about the draw process. The HUD consultant would be the one that asks for those draws. And so you've got to, again, vet your HUD consultant. You've got to make sure that they're not so busy that they can't come out and do these inspections so that you can get your next draw going. And it usually takes about a week or two to get the draw once it's been requested. So you want to make sure that after that work is done, that HUD consultant gets out there as quickly as possible to get that next draw going, for sure.
So on the, when I've done
I was going to say, how do you vet them? Because you just can't ask them, well, how?
Yes, you can.
Yes, you can.
Yeah, but they're just going to lie.
can.
Yes. No, you can get references.
2 weeks.
Mhm.
That's the answer. 2 weeks.
Remember that from the Money Pit? How long
Yes.
do
Exactly where I got the quote from.
That's hilarious. But
yeah, and so likewise on the limited products, you're only going to have 2 draws, one at the beginning and one at the end. And on the full, you're going to have up to 5 draws.
5 draws.
According to that draw schedule that you just mentioned.
So when I've done Fannie Homestyle, I didn't use a HUD consultant. I used Granite Construction or something. There was like a different company for conventional, and it wasn't the HUD guys, people. So do you guys use the same HUD consultants for both FHA and conventional?
Yes.
Oh, interesting.
They are HUD consultants. So
what?
They are called HUD consultants.
Yeah. Yeah. So again, they
work for both. They do both.
So again, check with your lender that you're doing your 203Ks, not your 203Ks, your Fannie Freddie stuff with, because not everyone uses HUD consultants. Some of them it was like Granite Construction or something. It was a company that you would hire they would be the equivalent on the conventional side of a HUD consultant. So
what kind of a project was it? What were they doing? I'm just curious.
It was just regular renovation. Okay.
What was the cost of the renovation?
I don't remember.
If it was Audrey,
but that matters because
it was not limited. It was a regular
not limited.
Yeah.
Okay.
It was.
Oh. And maybe somehow they were on the HUD list and but they happen to work for that company, but they're on the HUD list. Who knows?
No, well, we had to go directly. We were not using HUD consultants. It was literally, here is this company, you go get them to be the consultant, not HUD. But
and it was a Fannie Freddie loan?
Fannie Freddie, yeah. So we did a show with Catherine Hall, and when these new limited, when they upped good God, what's wrong with me? Thank you.
I know what you're talking
and they
about.
did all the changes. When they did the first changes that HUD had done, or FHA had done to the renovation program in 45 years, we had her on. And so Catherine Hall, if you go to our YouTube channel, you can listen to her show, and she's really knowledgeable. And she's a good resource if you're looking for a good HUD consultant. She knows them. She's the head of the HUD Consultant Association of America, or whatever they're called. That's not what they're called, just for the record. But she's ahead of that. So anyway, and then Jenny had a great comment about being careful with how you interact with the inspectors themselves. Remember, they're not on commission, and they could move even slower at those inspections. So
Very true. Be
very
careful
true.
Yeah, and some of them may not even be nearby. So then you've got to pay, in addition to their regular fee, you got to pay the mileage and all of that kind of stuff. So yeah, I mean, that could be a thing. So you definitely want to do your research on that. And you want to talk to several, not just one. Don't talk to the first one and just go with it. You should definitely talk to at least three of them.
Do you know, because I can't remember, and maybe Kevin, you remember, I'm not sure, but do they have to have a contractor's license, these HUD consultants?
I don't believe they do.
I believe they do, but I don't know that for a fact. I know I believe they have to have a contractor's license.
Yeah, I mean,
because
but I will.
Some of them will try and get hired for the work, so you got to be careful of that too. Yeah, I've seen one try to get hired to do the work. So
I've never had that experience.
I know. Then you got to go get another one if they're going to do the work. So you got to be careful of who you're talking to, and you definitely have to vet them.
Yep. Yeah. I would check references too. Who have they worked with? And maybe the lenders know, etc. I mean, lenders are going to know if someone's good or not. Also, I don't know if they're allowed to say, but we definitely.
Yeah, I mean, we can tell you some of the contractors or the HUD consultants that we've worked with.
I see this, actually, I see it on Nextdoor pretty often, where people are talking about, we hired this person to do this work and it didn't get done, and now we're out like tons of money. And we have all got to remember that you can't just trust someone up front, even if they're nice, that sometimes they're not telling the truth, and that we need to make sure, if you're asking them to do work that requires a contractor, check with the contractors board. Do they have insurance? Do they have any complaints? Like what? Google them. Do they have reviews, etc.? Because there's a lot of monkey business going on out there, and it's not good for anybody.
No, it's not. It's not. Another thing people need to be aware of is when they're doing renovation loans is the contingency reserve. And that goes anywhere from, again, 10 to 20%, depending on the type of renovation that you're doing. And the condition of the property. If you've got a property that's really run down and it needs a ton of work, we're going to go with more of a 20% contingency reserve. But if it's just your, normal update, you're just going to update the property, then that can be more like on the 10% side.
Okay. So again,
that's not that aggressive as far as being conservative or contingency wise. I'm just thinking, like, we have a rental property, and the last time we redid it was like we went way over budget because all these things we weren't expecting. It's like boom, boom, boom.
Okay, hang on. Let me just pop in here for a minute on this one. So it started with my tenants are moving out. Good thing we don't have to do anything because we just did it 2 years ago or a year ago or whenever the last people left, right? So, okay, no, you don't know. You just piped
and then we get in and we find hole in the living room floor. We find all the dogs scratch the crap out of everything. And
oh my God.
And,
okay.
Oh my God. It was just like one thing after another.
Kevin is, what's the word? Let's go with meticulous. And if you're a tenant, he's a fantastic landlord. That place was a show place for sure. But it took, how long did that take, Kevin? How long was that place without a tenant? Because there was so much to do.
I believe we went 10 weeks.
Yeah. On a place that didn't need anything because they had just done it.
Yeah.
So,
yeah.
But you know what he did do? It was really interesting. So he owns this place with one of his brothers. And the brother, so the people moved out there paying whatever the rent was, who knows, who cares. And then the brother was like, oh, the rent should be this. And this one right here, he studied the market. I mean, I got more updates on what the rental market in that part of San Francisco is doing. I can't even tell you. And he rented that thing for top freaking dollar. I mean,
Yeah,
yeah,
no.
impressive.
Listen,
Impressive.
there can be a lot of equity in your property after you do a renovation. We've seen them from the tens of thousands to like 200,000 in equity after the renovation is done. So
Yeah.
it's definitely a worthwhile way to go, especially like when people are driving around and they're looking for a property. Buy that rundown property in a good neighborhood.
Mhm.
Renovate it, and you'll probably have a ton of equity. I mean, it just makes sense.
Oh yeah, totally makes
If
sense.
Yeah.
if your client can handle it, because not, I mean, you know, the people who walk into a property, they're like, oh, I don't want to buy this because I don't like the color of the walls. I'm like,
Mhm.
okay. But some people do
Or
have
the one
some,
I love is, oh my God, the paintings in here are so lovely. Like, yeah, they're gonna go away. It's a closed deal. Come on.
although that's valid. I mean, if the paintings are good, I mean, why,
Yeah.
how would you not love that? Okay. So is there anything else on the renovation stuff, Lynn, that we haven't covered?
um, Let me see if I can think of anything as far as well, I mean, I would, as far as how to find renovation loans, you might want to get together with pool contractors, go visit some pool contractors and say, hey, look, I've got financing for you. And they're guaranteed to get paid. That thing that they love about a renovation loan, the contractors, is they're guaranteed to get paid. It's none of this
Wow.
haggling with the homeowner or whatever. They're gonna get paid. So they definitely want to do that. So that might be a way to do that. You know, and just get with your realtors and let them know, hey, you know, you might have this property that's, again, not meeting those minimum property standards. I've got a way to help you move that property. And then go visit contractors, go out there and, you know, solicit some contractors, take them to lunch, and tell them, look, I've got the financing. A lot of their people go to them to get financing, and then well, not get finance, to get a renovation done, and they don't have enough money. They find out that, you know, this is going to cost way more than they thought. And because we're using the after improved value, we can help them with that renovation loan and therefore help that contractor get that business. So there's ways to get the business out there. You just have to go out there and look for it.
I
Definitely.
love that you came here ready with some ideas for how we can go get more business. You're the best. Thank you. That's
Well,
awesome.
that's what we try. That's what we do, right?
Well, not everyone, Lynn, not everyone. Kevin, are you percolating an idea there? You look thoughtful.
Well, I'm trying to think in my particular neighborhood, I can't think of one person that owns a pool. So I think I'd have to maybe go to areas or maybe on the other side of,
That have sunshine.
yeah, that has sunshine.
Well, you have to go to areas where there's some land to build a pool, Kevin.
That's true
Exactly. I
too.
mean,
Yes.
your yard is so tiny, you couldn't get a pool in there. So,
And I got a postage stamp on my, yeah.
yeah.
Right.
Anyway, but yeah, we got to know who our audience should be. But I mean, certainly it doesn't just have to be your
Okay, maybe I
neighborhood.
could slip in a lap pool.
Yeah, you could.
And that would probably get it under the budget too.
I
And then I
don't
could
know.
say
Are
it's
they
got a
doing
pool.
lap pools in the, are you going to refinance your entire first mortgage to
Yeah, I
put in
think
a
so.
lap
I'll lose
pool?
that 2.75 rate I have and you get the 6.75 so I can get a lap pool. That makes sense.
Yeah, totally. And by the way, when was the last time you were in a pool, period, ever? Like,
Yeah, I don't remember.
Another thing I wanted to quickly mention on the renovation products is the minimum FICO score on our renovation products, including FHA 203K, is 620. Normally we go to 550 on our FICO scores, but I just wanted people to be aware that on the renovation products, the minimum score is going to be 620 for sure.
okay, that's great to know. Okay, so I saw a post on LinkedIn this week, and then I saw another post in a whole conversation on Facebook, and they were talking about DU approve, approve eligible with crap scores. So someone posted an approval and they had, I mean, all three scores were in the 400s, all of them. Because now Fannie Mae does not have a minimum credit score. Remember that? Which
True.
we have not really, I mean, I had forgotten all about that.
We're doing
So,
them.
okay. So
Lower
again,
scores.
400 credit scores, no
No,
joke,
we're
all
not doing
three.
that.
And so I left a message for this guy and texted him, and either he's left the country, he's in the witness protection program. I don't know where the hell he is, but I'm going to track him down. And because I want to know, is it his approval? Did he see it with his own eyes? Did it, is it real? But when I saw I mean, that's one thing, but then I saw that whole conversation, and again, run DU. That's what I'm saying. Run
Yeah.
DU.
You have to run AUS and get an AUS approval. But likewise, we're still going to look at the file. We're going to look at the credit. I mean, if somebody is perpetually late or perpetually having derogatory credit, we're not going to do that loan. But if it's somebody who, maybe has a lower score because they have a lot of debt, but they pay their bills on time all the time, that's a loan we're going to do. Or somebody had an extenuating circumstance, something like that. I mean, we do manual underwrites to 550 on FHA, and we make exceptions for people who may have had recent derogatory credit. So, but it's got to be a good reason. It's got to make sense. We're not just going to do somebody who is perpetually having a problem.
Got it. Yeah,
One of the problems is that they travel to Paris every so often and they run up a big bill and they can't pay it while they're traveling,
Okay, that's some bullshit, Kevin, because we all have these apps on our phone that have our credit cards on them or our mortgages. Click, click, click. It works overseas. You know how I know that? I've done it. So that is not an excuse. What?
I've done it also.
Yeah, exactly. Well, that's yeah. So anyway, and Jenny, God bless Jenny, who said, if you live in my area, pool or lake is necessary when it hits 110 to 115. So just to be clear, I don't know that it's ever hit 110 where Kevin lives. Has it, Kevin?
No.
No. I mean,
not even. I think maybe 102 is like the maximum I've ever seen, and that was one day 10 years ago.
He
Kevin,
lives in the fog.
We'll build you an outdoor shower. How's that?
Yeah.
Gonna take more than that to get him in a pool in that area. So anyway, all right. So Lynn, it's been delightful. We're so happy you were here today.
Thank you so much for having me. This has been fun.
Yes, big fun. And we really appreciate all that you have enlightened us about, because right now when we are so dependent on, I mean, you can't be banking on rates. You've got to just be looking for loans to close. And there's so many of them. Again, we're busy. I'm busy. Kevin's busy. And, and stick with them, because some of these loans are very frustrating and take forever. And if you just hang in there and you stay with those people, you'll get over the finish line with them. So just remember, who can you help? Who can you help? That's what we're all about, kids. All right. So with that being said, have a wonderful week. Go get a loan. Hopefully we're still in the green next week and rates are getting better, but we'll see. Go get a loan anyway. All right. Have a great week. Bye.